This is the best way I can describe this. For anybody who's been in the labor room with their wife, and Will, I know you haven't been there yet, but a lot of people listening have. And when your wife goes through labor, it starts off, the contractions are really spaced out far apart. Maybe they're 20 minutes or whatever it is. I can't remember. It's been a little bit. Then they start picking up and they're happening twice as fast. Now you're at 10 minutes. Then they're at 5 minutes and they're getting more painful and more powerful, right? Then you're at 2 minutes. And I think that's kind of what the global economy is going to really start manifesting kind of moving forward, is it's going to start birthing a new system. And what is the contraction, right? The contraction is the credit impairment, because what we're doing is just we're feeding this whole system meds, right? To make it appear like what we have is stability when we have nothing of the sort. The COVID shock, I think, was like the water breaking in the pregnancy. It was that moment where they had to step in with so much liquidity and so much monetary baseline units to replace all the impairment and all the credit that blew up in that supply and demand shock. And what it did is it just kind of has started these deflationary and inflationary spikes that I think are going to start playing out in a way that I don't think people can really even fully comprehend.
Yeah. So first of all, when I on Preston's show, I said final days. I meant from a big macro perspective, like we're in the end times, but this could take years to decades, and it probably will take decades. So the way I look at it is a couple of things. I think the foundations in the US dollar as being the world's reserve currency are clearly crumbling already. It's starting to dissipate and it's starting to decrease as the major player. Other things are rising. The second most popular is the Chinese yuan. I think China in general is on the up and up, and the US is on the decline. And so at some point there's going to be a transition point where kind of they take over as the world's major power. That's a little bit far off of what we're talking about. I do think China, Russia, and their allies have intentionally been they saw what is coming. They realize that when they buy crazy amounts of US treasuries that they're actually funding the US war machine, and it's to their detriment in many ways, and they're funding and supporting the US petrodollar system. So way back in 2014 they decided they're not going to continue buying US treasuries at the same level they were, and so they've been decreasing that ever since. Who picked up the slack? The Federal Reserve. So the Federal Reserve's been printing money and monetizing the debt. So the US is buying the debt of the US. And that doesn't really work out, as everybody knows. You can't buy your own debt and pay it off. At some point, the victim is the U.S. dollar and the purchasing power of the U.S. dollar. So the people who hold the U.S. dollar, us, the U.S. citizens, and people around the world who own the U.S. dollar, we're getting rapidly devalued. Our purchasing power is going down. I think if you look out about 10 years from now, I see three major currencies. So we have tons of currencies, tons of smaller government fiat currencies right now. I think they're going to coalesce. One by one, these smaller currencies are going to experience hyperinflation, and people are going to kind of panic, as anybody would, and move that purchasing power into one of the big three. So the US dollar, the Chinese yuan, and Bitcoin. And I think over time, 10 years from now, say, those are basically going to be the only three currencies that matter. I don't know what kind of proportion they're going to have. It's going to be interesting to watch too, because as Bitcoiners know, we don't really need these fiat currencies as a medium of exchange. If we have the Lightning Network, and there's going to be obviously more and more and better tools at that point to use Bitcoin, we really don't even need the fiat currencies. So I think that the government fiat currencies, though, are going to try really hard. I think China and its allies are going to try to wall off Bitcoin and have their own CBDCs, have their own ecosystem where they're totally in centralized control. I'm waiting to see what the US does, but I really hope, obviously, we go down the Bitcoin route. I would like to see in the next several years us starting to include Bitcoin as a reserve asset to strengthen the US dollar. I think that's one way that we could add tons of life to the dying US dollar as well. And then all of the other currencies, including even I think the euro and especially the Japanese yen, which has been kind of a major staple currency, a strong currency for decades and decades and decades. I think that's probably going to mostly go away and be irrelevant 10 years from now. And the reason why I have such a fast time frame on that is because Bitcoin is increasing exponentially. It's growing exponentially. And so it's just going to start absorbing all of these other currencies and all of that purchasing power in the next 10 years. So I just think we have a very, very different world 10 years from now when it comes to currencies.
Sure. And like, how does Bitcoin play into all this as well? Like, when we talk about like the end game for Bitcoin, when we think about like, like the S curve of adoption, with all that being said, like what's kind of the catalyst in your mind? Is it like the fixed income market just like completely breaking down, as like Preston's always like banging the drum on? Like, what is that like? How does that kind of process play into the thesis that you just described? Like, what's going to be the thing in your mind that really sends Bitcoin?
Yeah, so I think it's all of those things sort of in conjunction. I think as we start seeing panic in people, and I think we're starting to just see that now, right? We're having high levels of inflation, not hyperinflation, but high levels of inflation. People are getting priced out of the goods that they want. Quality of life is going down. Income inequality is increasing more and more. That causes wars. That makes lots of unhappiness. That's when regime changes happen, including even the US. We're not going to be immune to that kind of stuff. And so so basically, I view treasuries also as just they're the U.S. dollar, they're interest-bearing dollars. So they are also going to crack. And I think more and more people are realizing, look, U.S. treasuries are essentially return-free risk. Like, why would I hold treasuries if I know that with inflation being where it is, even if it comes down a lot, I'm still losing money. I'm still losing my real purchasing power if I hold treasuries. So one by one, these big pensions and endowments are going to start realizing that they're going to have these hard conversations in these big meetings. And they're going to decide, like, look, we can't do 60-40 stocks bonds anymore. We need to do like 60-30-10 and put 10 in Bitcoin or 5 in Bitcoin. So I think lots of that fixed income money is going to come into Bitcoin. I think, and then as I was saying earlier, other countries who have much weaker currencies than the dollar and the yuan, they're going to start deciding to, hey, look, I'm going to put my money in Bitcoin too, or at least put some of it in. They're going to try to transfer into better, sounder, stronger money. And so that's how I see it playing out. I think it happens slowly at first, then all at once. And then we hit that vertical phase of adoption. And I think people are going to start panicking at that point, like, oh, shoot, I should have done this years ago and I didn't. And they're going to start transferring into Bitcoin very quickly. That's where people are going to be talking about hyper-Bitcoinization in earnest. Again, I don't know when it happens, but Bitcoin keeps surprising to the upside. I think it kind of lulls people into boredom, and the volatility kind of throws people off. But then it just goes wham, and it's going to jack up. And these days of $40,000 per Bitcoin, we're not going to believe we just sat on our butts and didn't just buy everything we could at that point. Because I think there's going to be a day where it's $500,000, $1 million per Bitcoin, and we're going to look back fondly at these days.
So I think one of the things to highlight is that the kind of market conditions in general, broadly, really changed in November. And myself personally, I didn't nail the pivot. Like, I'm not gonna pretend I did. But really, with kind of inflation hitting, accelerating past 5%, 6%, 7%. Now we're at 40-year highs, maybe 50-year highs, depending on this Russia-Ukraine situation and the commodity shortages around the world. The Fed has gone from essentially, having that kind of implicit Fed put and protecting markets to, being somewhat of a political liability from the inflation front. Powell said, and I think it was late October, maybe early November, he said, I was wrong. We were wrong about inflation being transitory. We got to fix this. And although they just raised rates 25 basis points, what really I think is most telling thing is that credit markets are doing all the work for them. So if you look at short end of the curve treasury yields, right now the 10 years at 2.23%. And so if you just even like the 1 year treasury at 1.3, they were near rock bottom 0%. I'm not sure like exactly the low, but the short end of the curve has really risen significantly. And so for anyone not too well versed in credit land, bond yields trade inverse to the price of bonds. So obviously, as a fixed income investor, if inflation's at 40-year highs, if your CPI is at 8% and you're holding a treasury, that's giving you a 2% yield. Well, in real terms, you're getting killed, minus 6%. So what do? You sell that off. And so thus, because of this inflationary regime that the Fed said they were caught off guard by, fixed income in general has gotten killed, not just treasuries, but Also kind of corporate securities, junk bonds, investment grade across the board. You have also mortgage rates rising. So not only are we seeing broad-based commodity inflation, CPI inflation, particularly energy, right? If you look what happened in the '08 crisis, and with energy prices going parabolic, that was another kind of big factor in the deterioration of economic conditions, right? It impacted consumer balance sheets, corporate balance sheets, and margins across the board, as well as it basically puts inflationary pressure, which further deteriorates liquidity because credit sells off. So where are we today? Kind of in a pretty ugly position where we are more indebted as a total economy as we've ever been. Federal debt to GDP is over 100%. Corporate debt to GDP is at all-time highs following this decade-long negative real yield binge, and specifically after COVID, with the massive amount of fiscal and monetary stimulus in tandem. The economy is as more over indebted than it's ever been, and we're facing a situation where the Fed's kind of regime has changed. They're now saying we're going to tighten, but again, the Treasury market's doing that for them. So yields are rising across the board, which leads to higher financing costs in a historically over indebted economy. Not to beat a dead horse, but I don't think many market participants have grasped this. So while increasingly the developments of Bitcoin have been really, really bullish, right? I've said multiple times, BTC as a numerator, I've never been more bullish. But how the credit system works and the economy more broadly, when you see a recession, when you see a period of credit contraction and kind of a liquidation of malinvestment, what's happening is that dollar is bidding, USD is strengthening, also against other foreign currencies. So which means that foreign debtors have to sell their dollar-denominated assets to raise cash. So that's kind of why I have been increasingly, I guess you want to call it bearish. I mean, I'm not long-term bearish by any means on Bitcoin, but more so just kind of with elevated volatility and everything in the legacy markets. It doesn't look like an ugly picture, and I don't think we're in the up only by the dip regime that everyone came to know of post-COVID.
So now those geopolitical incentives are kind of driven from a competition with other nations, right? For resources, for control of currencies, for kind of military. And there's almost a checkmate. If you're another nation and you don't have nuclear weapons, you're trying to develop them as fast as you can, right? That puts the world in a very dangerous spot because we've never been at this point on a transition between currencies, and had weapons to destroy the earth. And any single thing, any single actor could precipitate something that could make this a very dangerous game. The other side of that, assuming we don't annihilate ourselves on the way through, is this change moves the Schelling point from global competition to global cooperation, and it's and that Schelling point moving from global cooperation. If you think about the marginal cost of production. And the marginal cost of production, which used to have us in it, labor is one of the biggest pieces. That labor is being removed with technology. And what that means is prices fall to the marginal cost of production, which is near zero in a lot of cases over time. That change of prices falling at that rate means we get abundance if we allow the abundance. So Bitcoin, and it means even if you hate Bitcoin, right? If you looked at your calculator app on your phone, people think that it's on your phone because of advertising, and it's free because of advertising. It's free because it's a line of code, and there's no entrepreneurs that want to write another calculator app to compete against that line of code because there's no money in it. And so what ends up happening is as more and more things become technology enabled, they keep driving down in price. And that abundance, the only way for that abundance to be broadly shared is an incentive, is an economic system that allows deflation, allows that to happen, to be broadly shared. Meaning you could hate Bitcoin. You could be one of the people over here yelling at it, and it'll still benefit you.
the way I think about Bitcoin's base layer is, as I was referencing, it is definitely important that we have a physical instrument that is digital, right? The whole reason we could do this, NCR could check out Wendy's by themselves without having to call banks and card networks, is because there's no concept of debt or credit in the payment, because you have money that can actually move digitally. An internet request is the settlement. There is no complex like negotiations of settlement in 2 to 15 days and what's your credit score. All Wendy's cares about is, hey, you're asking to pay me for a cheeseburger. Is there the money in the message? Is there Bitcoin in the message? Is this a cryptographic payment? Because if not, I don't care your credit score. I don't care where you live. I don't care your gender. Like, either the money's in it or I can't give you the burger. And it's that simple. But the only way, Will, that we could have that is if the money is digital. And if the money is digital, it has to live outside of a central authority. It cannot live with a government. If it's this global thing that kind of lives in the clouds, is what I tried to describe in my presentation. It's almost like within the heavens, this thing. Then the base layer is about enabling a digital money. That's it. It's not about like, well, the base layer is for the slow stuff and Lightning's for the fast stuff. No. The base layer is not about moving. It's the Michael Saylor line. The base layer is not about moving $1 million from here to Japan or moving $10 from me to Chipotle. The base layer is about being able to move $1 million from here to the year 2140. The base layer is about building an asset that has sufficient distribution, fair distribution, known monetary policy, fixed supply, sufficiently decentralized within a distributed network, extremely good security, and is resilient, censorship resilience, and resilient enough to where anyone can join the network. Anyone can, like, so for people that are like, oh, this altcoin is going to make a better version of the Lightning Network. No, they're not, because there is no other sound, secure, deathly trustworthy digital bear instrument that I can embed in the message to Chipotle. So the base layer is not about, it's the bedrock of it. And it's the only way that we could disrupt payments is if the digital bear instrument exists, and it's going to exist forever. And we know that it's going to exist forever. So it's like, oh no, that Bitcoin's too slow. No, you're thinking about it wrong. Bitcoin is going to exist forever. And there's going to be demand for it forever, because it's scarce, because the monetary policy is known, because it's global, because no one can control it. And that allows us to then build a payments network on top of it. So to think that the base layer is like the slower version and this one's the, no. The base layer allows the physical digital instrument to be alive forever. And so like Ethereum, all these other altcoins like Dogecoin, like their base layers are not that. It's not like an infinite bedrock, like what Saylor says, like the cyberspace granite that you can build cities on top of. And that's the way to think about the base layers, not moving money from here to Japan or here to Chipotle, but moving $1 million from now to 100 years from now.
Sure.
And then the Lightning Network just makes the ability to move the physical digital instrument fast and at no cost. And then once you have that, then I can send a message to Wendy's and embed the digital money into it. And it's open for anyone to build on top of. And so like the thesis behind Strike, like why are we auto settling into dollars, is because if I wanted to enable these people to do that, like these people, Whole Foods, Wendy's, Starbucks, is it has to be compliant, it has to be regulated. The accounting practices, like you don't want to have to tell all your shareholders, we're having like a difference in our balance sheet, in our accounting, have to wait for regulatory bodies to figure out how to deal with settling Bolt 11 invoices with public companies. No, just give them the Visa experience, just cheaper, better, faster. Give them the dollars instantly. There's no concept of interchange. Anywhere between Cash App users to Tor users can pay you. And then if you want to use the dollars and buy Bitcoin and add it to your corporate balance sheet, and like a lot of these people are Bitcoiners and they'll get around to it, but that's it. But that's like the whole, I don't know, like it's not Fedwire and Visa. It's like enabling a digital bear instrument to exist so that payments are not debt promises, so that payments are not promises of future settlement, so that when I tell Chipotle I want to pay, I can embed the digital money inside of that message to them. And then whoever's on the receiving end of that, like NCR, can take the digital money, convert it to dollars, and hand it to Chipotle. And they never have to call the banks and the card networks and have this sophisticated like future settlement and debt. And that's when you get like someone in Nigeria can't use certain aspects of my financial system because Chase hasn't deemed them creditworthy enough. And maybe it's not about their actual creditworthiness. Maybe Chase just doesn't have the bandwidth to figure out everyone's creditworthiness in Nigeria. But now that like Chipotle doesn't give a fuck. Like when you want to pay me, if the Bitcoin's in there, I'll give you the burrito. If it's not, I don't fucking care. Like it's not about this complex society of debt. Does that make sense?
Yeah, so the Terra ecosystem is basically based around algorithmic stablecoins, and those are very different from collateralized stablecoins. And so for collateralized stablecoins like Tether or USDC, they hold a certain amount of assets that can be redeemed, for those tokens. Basically, you're at least supposedly backed 1-to-1 by assets. Whereas in an algorithmic stablecoin, they use software to try to make a token worth $1, even though it's not actually backed up by any dollars, right? It's just kind of this artificial mechanism to try to maintain it at the value of $1. And as one might expect, those have been fraught with failure. You're kind of the mechanism is you're trying to be like an emerging market central bank, except without capital controls and without an economy to tax. It's kind of like this based on this first in, first out, and a really shaky set of kind of economic principles that can only last so long. And so the way that worked is if their stablecoin was below the peg, it was below $1, you could basically arbitrage that in order to get that back up using their other token, which is Luna. And so basically what it does is it pushes the volatility over to Luna. And as long as their stablecoin demand is increasing, it also increases the value of Luna over time generally. But the problem is that the demand for that was artificial. It was based on artificially high yields from various VC incentives and things like that. Basically, it wasn't a sustainable organic demand. It was kind of this, you can call it a Ponzi scheme. That's not really far off. Basically, it's this kind of front-loaded, unsustainable type of thing to draw capital in. And those are vulnerable to attack. Even without an attack, basically UST surplus yields were going to dry up, and so basically we saw a run on the bank. Basically people started to see that it was failing, and they all wanted out at the same time. And so Luna's equity was brought down to basically zero. You lose 99% plus of the value, it goes to zero. And the peg breaks. And so this was something like, if you combine Luna and their stable coins, it was nearly a $60 billion protocol, and that was wiped out in a matter of days. And a challenge is that they I think they saw the writing on the wall. They were worried about the possibility of a death spiral, so they started buying other assets ahead of time, kind of like an emerging market, holding treasuries or gold as a reserve currency that they can sell if they want to support their currency. And so they bought Bitcoin, and then they had to sell that into the market, or specifically they were loading it to market makers to do various ways to try to defend the peg. And so they had to sell Bitcoin into a weak market. And now there's contagion because multiple funds had exposure to it. This was kind of like a Lehman Brothers moment for the crypto space. And if we zoom out for a while, so there are a number of people warning about this. I warned about it in the month ahead. And if we zoom out at why this happens over time, right? If you look at business cycles, right? So, and I've shared this with you before, that the PMI cycle, so Purchasing Managers Index, that's kind of a gauge of is economic growth accelerating or is it beginning to slow down? And it's not whether it's growing or shrinking, it's whether it's accelerating or decelerating. Although if the number gets low enough, it becomes outright shrinking. And what you generally see is that during accelerating periods, that's when liquidity is flowing. It's easy to get credit. Often the Federal Reserve is pumping money into the market. You have these economic booms in the United States and many other parts of the world, and anyone with like a narrative can sell these tokens, these unregistered securities, and offshore regulatory gray zones, right? They can just pull in capital. And when you have those declining PMI environments, liquidity being withdrawn, it's like the tide going out, and anyone who's swimming naked gets exposed, or at least a lot of them. and we generally see these boom bust cycles. And so that's essentially what we're seeing now, is that after a big giant rise up in PMIs and economic growth and liquidity, we're now getting a pullback in all those things. And so all these things that were kind of based on first in, first out, Ponzi-nomics, the vast majority of that is just getting cleared away. And unfortunately, that's a very large percentage of the crypto space.
And then we have, when we get to hyper-Bitcoinization, the moment is now, right? We're at the nation state level. We have El Salvador. We have President Bukele has adopted legal tender, Bitcoin is legal tender in El Salvador. But what came first? Like, did that move cause the U.S. to freeze reserves on February 26, 2022? Everything has changed from that moment. Just because people don't recognize it, it doesn't mean it didn't happen. What happened on February 26, 2022 is the U.S. seized reserves. The first time that has happened of a foreign nation. So the dollars, like, they blew up the dollar. They decided to wipe it out as layer one money. Like, it's no longer fungible. It is you need that to be money. And now it's not. Like, they froze reserves, it's over. So just because people haven't recognized that and they're still in a fiat mentality of like, number go up, which one am I need to like flip around with Hex or Solana or AVAX or any of these other shit coins in order to buy more Bitcoin and whatever. That's just a mentality that is fiat. What price is there to what unconfiscatable permissionless wealth? Just like we were talking about masterpiece art. There's no price literally on the Mona Lisa, because how do you even price it? That's the same thing. Like, where we're going with hyper-Bitcoinization, there's no price on that. How do you, in a world of a disintegrating fiat, in a world of a collapsing empire, and it's not, saying anything unique to America, because all empires have done this before them. Like, they all take everything down with them. And if their dollar, if they can't sustain the exorbitant privilege and the cantillionaire effect for their own elite, then they're going to take the whole thing down, clearly, because that's what they've just done. So, this is a new era, and I think it's hyper-Bitcoinization is here, and there's no sort of way to value your life, your sovereignty, and unconfiscatable wealth.
Was, look, the people who are interested in this space, in the institutions, they're from the technology side. Like, they look at this as technology. The technology analysts are the ones who are analyzing it. The ones who understand cryptography and cryptocurrency implications and how it all fits into the space. But once that kind of bleeds over and really moves into the financial world, and people start looking at this as it's digital money, I think that's where it starts to differentiate itself. But the big break will be when people understand that it's a store of value. Now, how do we get there, right? So the question is, like, what is it going to take for Bitcoin to be, in particular, to be seen as a store of value? And I think it's going to take the asset to have enough market value and liquidity that the volatility dampens. And that's going to it's going to happen in steps, right? So it's going to take a few very, very large institutional investors to start buying Bitcoin, right? And not just buying it, but then also announcing that they've bought it, right? So you've got 5 firms. We talked about this before. We've got 5 firms that control $30 trillion of investment assets in the world. So if you figure that there's, about $700 trillion in total investment assets, $730 trillion in investment assets, that's a lot, 30 trillion out of 720. So, but 5 of those firms, you got BlackRock, Vanguard, Fidelity, State Street, and Morgan Stanley. And if any of those firms start announcing that they've really taken this and considered a separate asset, and we know that, we talked about Fidelity, we know that they're doing something. BlackRock, of course, is doing something. But when Vanguard comes out, when Morgan Stanley comes out and says, we are putting this in our portfolios, that's going to be a big deal. So, and once they do that and they start buying it, then you're going to get a lot of other investment managers that feel like they've got to do this. So it takes time, but we'll come back to that in a second. But Once they start buying this and they decide they want to have a 1% position in this, well, then Bitcoin, a 1% position in all assets, right? So if you look at all portfolios and across all asset classes between bonds, investable bonds, corporate bonds, sovereign bonds, you've got stocks, you've got real estate, you've got art and collectibles, and you've got gold and silver and metals. So, but if you put all of that in a basket in one big portfolio, and you say that 1% of that has to be the separate asset class, well, then you're already at a $350 million Bitcoin, $350,000 Bitcoin. Sorry, don't want to get everybody too excited. So, but $350,000 Bitcoin, okay, now you're talking about a $7 trillion asset, right? You get that up to 2%, and you're talking about over a $10 trillion, $14 trillion asset. Now you really do have the ability to put money in this and not see that same volatility. It's just not going to move the same way as it does here as such a small asset. I mean, we're not even half $500 billion anymore. So, but once you have that, then I think that it really takes off. And I don't know where that breaking point is, but it's somewhere before that store value recognition that it just becomes completely uncorrelated. So maybe somewhere between $100,000 and $200,000 Bitcoin, where it rips up and it just completely decorrelates to the rest of the market.
The mathematics is as simply as this. The USA right now at historic low interest rates is barely collecting enough US tax revenues to cover its interest expense 100%, which means if interest rates rise, which they are likely to rise since the Fed is pushing short-term interest rates higher, the average funding rate for the USA is going to increase, and that will lead to higher interest expense, which will in turn lead to the organic growth of the US debt outstanding just because of interest. And so James Lavish put out a real good synopsis of this, and I'm just going to borrow. I had the same numbers, but we'll borrow from this from James's report. The USA collects $4 and change trillion annually in tax revenues, and mind you, that has been augmented lately because of nice capital gains increases in stocks and assets. They collect $4 trillion, and they have what's called they have their primary. They have a fixed cost base that includes entitlements and military spending. And the combination of entitlements and military spending is in the area of 3.6 trillion, which leaves the balance of the tax revenues to pay for the interest expense. Now, the USA has $30 trillion of outstanding debt, Joe. And right now, their average interest expense is about $400 billion annually, okay? But that's at historic lows. The average interest rate that they were paying, if you do 30 trillion divided by 400 billion, is around 1%. But that's likely to rise to 3%, right? Because the Fed funds rate is, U.S. 10-year rates are now, 10-year Treasury yield rates are now 3%. And the shape of the yield curve and the funding, the blended funding cost is going to cause interest expense to increase so that they will not even cover their interest obligations, expense obligations, with the residual tax revenues over entitlements and military spending. So it basically means that that spiral is growing organically and can be quite severe if the Fed has to push rates significantly higher just because they are fighting inflation. It all leads to, my opinion, that quantitative easing, QE infinity, is in the offing. There's no other way to solve the debt spiral.
What are your thoughts on the idea that some people say Bitcoin mining wastes energy?
Wastes energy. That's an interesting term, period, right? What I think is this. The less painful it is to waste energy, just as a whole, the more indicative it is of a very robust and abundant energy market. in the world, right? In other words, if we just had, say for example, all of a sudden tomorrow we had, 10 times the energy production capacity that we do today. Like, what would the world look like? What would the world look like if I could consume, if you will, or convert a megawatt of power before I have a cup of coffee in the morning, right? Like, and economically do it. Well, that would mean that I have I'm living in a world where we have insane abundancy of energy and power. That's what Bitcoin leads us toward. And it doesn't lead us there by incentivizing the waste of energy. It leads us there by penalizing wasted energy, right? Before Bitcoin, for example, in the oil field, flaring gas was such commonplace. I mean, it's still pretty much commonplace today. It happens, so frequently, but it was such commonplace and mentally, right? Microeconomic behavior didn't associate any pain to flaring or wasting that gas. Producers looked at it as, hey, we want to produce this crude oil. Almost 99% of the time that you produce crude oil, you get some associated natural gas. We burn that natural gas off because, it's a cost of doing business. It's a cost of producing the oil. There was not a direct penalty there. Now with Bitcoin mining, any oil and gas producer out there who's just flaring energy dense, CH4 methane, well, they could be earning, with new gen ASICs, $8 to $12 an MCF today, $8 to $12 per thousand cubic feet. So there's literally a stark dollar, amount, a nominal amount of pain associated with that activity. Bitcoin penalizes energy waste. And through doing so, it will lower the time preference of energy producers, which will cause them to be more stewardly of the environment, cause them to be more efficient, better prepared, and ultimately be more economically efficient, right? They will be able to better allocate their resources, which will bleed downstream to everybody, right? Again, it'll bleed down to every consumer. So Bitcoin doesn't waste energy. I mean, energy is never really wasted. It's never really consumed, right? It's only converted. Bitcoin is going to be, or is the thing that is going to really revolutionize how we approach energy production. Because if you're wasting energy now, you're a dinosaur, right? You're an idiot. From an investment point of view, you're toast, right? You're never going to be able to compete. And so the bar has been raised, right? It increased the standard of energy production and power generation. There's no waste that Bitcoin caused. Bitcoin didn't cause any of this waste.
Yeah, and I fully agree. I think energy is how, civilization scales. That's how we have the great products and services and technologies that we do today. And if we're going to build a world where we have better technology and better goods, better services, we need more energy. So energy is not a bad thing. And Bitcoin mining is somewhat like incentivizing the reduction of energy waste, but in a way it's also incentivizing the production of more energy to help everybody.
Right. I mean, this is a harsh world, right? Like anybody who's tried to live in the environments, anybody who's experienced prolonged exposure, right, to the elements. I personally, right, I've done some expeditions in South America through Patagonia. I've traveled glacier and things, and I mean this environment. I mean, people kind of have this notion. There's kind of this idea that like the Earth without humanity on it, like if you just like removed all the people and the Earth just sitting there, and if we didn't impact it at all, like that, it's like this utopian, Garden of Eden kind of place, and it's just not, right? Like we have to bear this planet that we live on. We have to bear the context of it, and electricity specifically, but energy and electricity, energy and power are really what allow us to even live, to be 70 years old, right? To even have things like hospitals in abundance, right? Where there's hundreds of hospitals per state in North America, right? This is the fundamental, the fundamental fuel to comfortable living and to quality of life is energy and electricity. And so it's easy when you're living in an abundance, you know, in the United States specifically, we are well off, right? We are well endowed with natural resources, and we have incredible infrastructure here. For the majority of the world, reliable power, reliable energy is a matter of life and death, right? Here in the United States, you know, we can use intermittent and unreliable sources of energy and get away with it, right? Because we can back up our wind and our solar with abundant natural gas and things. But in other places, reliable power, reliable energy might seriously be, you know, the difference between life and death. And so this is a matter of bringing humanity into the first world, is bringing humanity into a context, into a living situation where electricity and energy is abundant enough that it's economic for everyone to use at will, right? And that's the world, you know, I want, right? That's the future I want. The world I want for my kids one day is one where, you know, you can go and do research and development and waste gigawatts of electricity just trying to, you know, make a process better or trying to invent something new. And if you fail, it's not like a massive detrimental cost. It's, you know, it's so economic that we can desalinate ocean water, right? Heck, I mean, what if we have so much abundant electricity, we can just, you know, we can actually tweak the atmospheric composition of the planet to however we want it, right? And control weather, right? I think that comes in a world where we have a nuclear reactor on every corner kind of a thing, right? And so I envision a different future, I think, than and have different assumptions than those who would maybe criticize such a thing.
Yeah, and in a way, I feel like your vision of the future is more of like a bullish future. Like you're more of like a definite optimist rather than maybe like a definite pessimist, where you're like, hey, everybody stop consuming as much energy as you can. Like, let's conserve this. Let's just not destroy the planet. And you're like, hey, let's consume a lot of energy. Let's produce a lot of energy, and let's make the world a better place. What would you say to people that may think, hey, Bitcoiners are too toxic? What's your argument to say, like, hey, like, yes, Bitcoiners are toxic, but it's helping get the 10 million Bitcoiners? Like, people might think toxicity would mean less than 10 million Bitcoiners. And I would imagine you would argue the opposite of that.
I mean, I muted all 4 people that talk regularly about Bitcoiners being toxic, and then it's just like not a thing anymore. Like it's such a just obvious ploy to get attention for those people to, you know, use some epithet that Vitalik came up with and lob it over against Bitcoiners. It's just like, it's so dumb. It was always such a dumb conversation. So I just ignore it.
Yeah, it's fair. It is funny
I'm a
how
Bitcoiner, and like, I just, you know, it's just stupid.
Yeah, definitely. I remember like in 2018, I feel like I don't know, I guess it started out originally with Vitalik calling Bitcoiners Bitcoin maximalists as an insult. And then in like 2018 and 2017, Bitcoiners kind of like embraced it, and they were like, yes, we're Bitcoin maximalists. And it was kind of
Samson
funny.
made those dope hats.
Yeah.
The toxic Bitcoin maximalist hats with the hazmat logo.
Yeah,
I mean,
exactly.
Listen, like any epithet, like if a community that's being targeted wants to co-opt it and own it and just have fun with it, like it's totally within their right to do it. And I don't really give a shit if another Bitcoiner wants to call me a maximalist, but I'll stop the interview if I'm on a crypto podcast or a mainstream interview, and I'll explain that's, Maxi is a diminutive of an epithet, and it means you don't know what's going on here. So let's talk about it.
Yeah. No, it's just the history of the term is just kind of funny.
Yeah.
In the Bitcoin world.
Yep. I mean, what I generally find is these guys have debate backgrounds, and they're good at creating straw men and pretending that there is a type of person that doesn't actually exist, or a position that nobody actually takes, and claiming that that's a position that's actually widely held. And it's just complete mental masturbation on their parts. And maybe it gets, I can name them, like maybe it gets Udi some blockchain consulting revenue or something like that, or, helps Eric gain some AUM for his crypto fund. But like, these are not people, I was disappointed to see Eric follow suit this year. Udi was always like that. Eric Wall has contributed quite a lot, frankly, to Bitcoin thought. And I think this was just an unfortunate sidetrack. But, you know, once he's done with it and wants to come back, I would say, you know, has generally been a genuine participant until this year. But Udi, I just don't have any time for it all.
Yeah. Yeah. Another, I guess, thought leader, quote unquote, in the Bitcoin industry that I liked was Trace Mayer. I think he made like a lot of great videos back when he was, you know, actually a full Bitcoiner.
Yeah. Yeah. I mean, I don't know. He did his exit scam for whatever reason. I don't know. It's a shame.
Yeah.
You know, I like the way he
like,
talked about things. Yeah, go ahead, Joe.
Yeah. I heard Caitlin Long was on a podcast like maybe a week or so ago. And she mentioned that she had talked to Trace recently about Bitcoin and stuff. And I thought that was interesting because he definitely has gone dark. So I wonder what he's up to. Trace, if you're out there, come on the podcast. I'll talk to you.
Come on the pod. Yeah. Yeah. I mean, listen, man, there are so many voices out there now that you don't need to listen to people whose views are adulterated by bullshit. Right? Like, I don't need to point people toward Andreas anymore because there's plenty of people out there that aren't confused and who actually do understand money and economics to a degree much greater than he does. Even though he's a fucking genius and I love his videos and it was instrumental to like my understanding of Bitcoin. And I remember certain videos of his, I used to listen to the YouTube videos more than watch them. And I remember what street I was on and where I was walking or whether I was with one of my daughters and like when that point was made by Andreas and I sent my parents to go see him live and like all this stuff. But it's like, at the end of the day, if you're also saying there's going to be 10,000 of these tokens and some girl in some village can like create a token that's going to get used as money in her region of a continent, it's like, dude, you don't understand this shit. Like you have massive gaps in your understanding here. And, you know, I think, yeah, I mean, the same goes for quite a few people who were at one point the best we had, but now we have better. Like Roger Ver used to be one of the best advocates for Bitcoin, but he didn't really understand it, you know, and Andreas doesn't fully understand it. And I'm not saying that I do, but I can point to some things that they get dramatically wrong about Bitcoin.
Yeah. Yeah. Bitcoin does have this habit, or the Bitcoin community does have this habit of killing their thought leaders and transitioning to new ones that, you know, some argue are better, some argue are worse, but it is interesting how that continues to happen. I think, again, that's kind of a feature of the community out, you know, there's not really a clear leader. I think that's kind of the
100%. And yeah, and some of the best people that really do know it through and through, they get tired. So they don't want to be in the Twitter fights. And so then you're sending your B team, you know, and, you know, everyone on the crypto side is on the B team by definition, but they're going up against the B team on the Bitcoin side because the other guys are kind of retired. They're tired of it, you know? Yeah. So you're not getting Jimmy and Jameson on every single fucking thread.
Yeah.
If you did, you just get stomped out like Michael Jordan in 8th grade game. Like you just get crushed every single time. But, you know, people like to argue with somebody today.
Yeah. Yeah. I mean, it kind of goes back to the idea that a lot of the setbacks or like critiques of Bitcoin were answered on like the Bitcoin Talk forum back in like 2011.
So long ago. Yeah. You can just go back and, you know, you read like, you know, VJ from 2018 or Beauty On from like 2011 or whenever his, you know, some of his first stuff. Like there's so many good things that Hal and Satoshi said, just like answer the questions on first principles and explain how this shit is going to play out. And it has exactly done that in so many ways.
Yeah, exactly. And those guys that I guess understood it or somewhat understood it back then have, you know, thousands of BTC. So they're not on Bitcoin Twitter arguing with each other,
Listen, we're going to, in 2026, we're going to be talking about people that have tens of BTCs as being filthy rich. And like, you know, another 4 to 8 years after that, it's going to be like anyone with a Bitcoin, you know, it's just going to be, yeah, it's just going to be more and more scarce as compared to the number of humans that want some.
Yeah. Exponential scarcity is a wild invention and we're watching it play out in real time. So
I think there's a mismatch between perceptions and reality about where some of the technology is in terms of different energy sources, right? So something, like 3/4 of global energy comes from hydrocarbons. And then the rest, hydro and nuclear are big chunks, and only something like 5% is wind and solar. But as wind and solar have kind of been pushed to be larger and larger parts of the grid, and there are certainly applications where they're useful. There's very hot and dry regions of the world. Rooftop solar can give you kind of more autonomy from the local grid if you have, say, rooftop solar and a battery backup, for example. So, but as they've kind of put policies ahead of technology, and you kind of obfuscate the costs, overstate the strengths, and get that into the grid, it's kind of caused some issues. There's also a challenge where there's not a lot of investment in the grid itself, right? So, for example, California keeps having their electrical grid, parts of the electrical grid face rolling brownouts, and you can imagine if you were to say 10x the number of electrical vehicles that are drawing power from that grid instead of through the gasoline distribution system we have, right? That's all now. If that starts going over the grid, that's more stress on the grid. You need more copper, you need more redundancy, you need more cables bringing that around. And so I think the short-term way out of this is, frankly, just there needs to be more supply of hydrocarbons, natural gas, oil, and coal, because that's what the world's currently short of, especially in certain locations. Longer term, I'd like to see a nuclear renaissance. Combination of smaller reactors and a better regulatory environment could really make nuclear come back. I mean, decades ago, it was actually pretty cheap and quick to build a nuclear plant. As there've been a handful of accidents, which there's actually, even if you add up all those accidents, the number of, even if you take the worst case scenario of not just immediate deaths, which was very, very few, but if you kind of take the high end estimates for environmental damage and what that could have caused, kind of in the region, it's like it killed fewer people than coal kills, every year, for example, through particulates in the air. But nuclear got that kind of increasing regulatory burden, and that now makes it almost impossible in many places of the world to build a new nuclear facility. And of course, you want safe operation. So, for example, part of why Chernobyl was so bad is they didn't even have the shield that now is standard practice among the nuclear facilities. And so there's really bad ways to build a nuclear facility, but the modern ways and back then even the responsible ways can build safe nuclear. And so I'd like to see that combination of they've developed small modular reactors. That's been a big a push lately. And if there were kind of easing regulatory environment, I think that nuclear can at least solve a lot of the baseload grid power. And then longer term, there's interesting things like ocean thermal energy that I think is underexplored. There are other ways to get baseload power, but the general thing you need is that you need to have nature do as much of the storage and concentration as possible, because the more that you have to replicate with machines, the less efficient and energy dense that's going to be. And so I think that's the big theme that a lot of people are missing in the energy space.
And I think this is the beauty in Bitcoin, and what has drawn me to it and what continues to get me excited to cover it is that Bitcoin is essentially a check on perpetual central bank policy error. For a lot of this discussion, we've been speaking about how the Fed is getting it wrong, and they have gotten it wrong, right? They're not witnessing the global dollar shortage abroad. They seem to not understand that inflation is a rate of change, and if they pause at the level that they're at now, it will go down over time. They seem to engage in these extreme highs for interest rates, followed by extreme lows for too long, and then extreme highs very quickly. And this is what they've been doing time and time again for the last 50 some odd years. As a function of this, if you understand that every single deflationary bust, every single massive growth slowdown is met with copious amounts of monetary stimulus, right? They create new facilities for pumping the economy with liquidity all the time. In 2008, quantitative easing, it was a thing in Japan before 2008, but in the United States, this new facility was invented where, bank reserves are injected into banks out of thin air from the Federal Reserve in exchange for a treasury, right? So essentially printing money. This liquidity facility was invented. It was invented out of thin air. And so if you understand that every single time there is an asset price bust, there's a growth bust, it is met with more credit expansion and new and unique facilities for liquidity and credit expansion, then you understand that, okay, if this is going to continue occurring, and I have no reason to believe that it won't, because, the Fed is not just going to, change their ways overnight. If I feel that this will continue occurring, right, this extreme credit expansion as a result of aggressive over-tightening of monetary policy, which I do, then I understand that the liquidity tide is going to flow once again. And it's going to flow harder and faster than it did the previous cycle, as it always has. And so with that in mind, I want to park my money somewhere that's a check on that. I want to park my money in the most porous sponge for global liquidity, right? What is the most porous sponge for global liquidity? Well, there are a couple of things. Well, I want to make sure that what I'm investing in, what I'm purchasing as a check on perpetual liquidity expansion, it's infinitely divisible. I want to make sure that when I get in, it's not as if new participants are going to be bidding up, an increasingly finite supply. I want to make sure that it's divisible, say, into the hundreds of millions, right? I also want to make sure that it's infinitely scarce, right? What's the utility of holding something? If we know that liquidity is going to expand in perpetuity, I want to hold something that is infinitely scarce, absolutely scarce into perpetuity, right? I don't want that to change. And so when I tick off all those boxes, when I understand that, liquidity, global liquidity, it flows harder and faster every single cycle as a response from the Fed because they don't know any better. They're not going to change their ways. Then I pair that with the existence of Bitcoin, right? Then I understand that Bitcoin is essentially a check on that pro-cyclical over-easing, over-tightening, followed by over-easing, followed by over-tightening, this boom and bust cycle monetary policy that continues injecting the economy with increasing amounts of liquidity every single time. And so Bitcoin offers up the apex solution for that. So asset prices in general, right, they all appreciate when global liquidity appreciates. But what is the most porous sponge out there? And Bitcoin's the most porous sponge out there.
I'm curious, what are your thoughts on the whole SBF debacle? Is he just going to, be in the Bahamas forever, or do you think he might get arrested at some point? And also, why do you think the media isn't necessarily painting him as this, obvious villain?
Yeah, I'm really disappointed by everything that's happened with SBF. And it's sad that Bitcoin looks bad in this whole thing, especially for people who don't understand the space. But it's neutral. It did nothing wrong. It was just cross-collateralized, and people like SBF create these paper versions of Bitcoin, and that's so unethical. So my reaction is I hope that the DOJ, I hope that the SEC, I hope that law enforcement agencies go after him and bring him in and formally charge him, because in my opinion, what he did was fraudulent. It was a Ponzi scheme. It was to enrich himself. The fact that he was basically loaning money using an air token as collateral, loaning money to himself, that people affiliated with him, including his parents, may have purchased expensive properties. This is wrong. This is not what this revolution of Bitcoin and removing the power of money from the state, this is not what this is about. It's not about enriching a small group of individuals who think that they, have the right decisions on how the future should be created. It's wrong. And he duped so many smart people, which is amazing to me. These massive institutions, from the VCs to these celebrities who had a ton of money. You would think that they would all do their due diligence to make sure that they're not just putting their money into a group of Silicon Valley former Ivy League nerds who are going to basically wash trade it with themselves to pump up the value and take out loans and to become their own bank and take out credit lines and then trade it and pay off politicians and then lose all the money. This is ridiculous. And they did it all offshore for a reason, because everything that they did is inherently illegal. And so I hope that it's a huge lesson. I hope that in the end, I think it actually strengthens Bitcoin and what Bitcoin's all about and Bitcoin's value proposition. But in the meantime, I just hope that these policymakers actually hold him accountable and take the time to learn about why this happened and how. The fact that he's sort of, as of right now, getting a little bit of a pass, like Representative Maxine Waters, I think, tweeted at him something that was equivalent to, oh, please talk to us, Sam. Come. Thank you for explaining the things that have been going wrong. It's like, no, hold this guy accountable. This is the Bernie Madoff of crypto right now. And everybody's just sort of, approaching him on eggshells. And I don't understand that. So I think that charges will come down. I saw that Caroline Ellison was spotted in New York. I'm sure she's working with an attorney who wants to get her some sort of a plea deal. The only way that that'll happen is if she divulges a ton of information. So I think it's going to be a couple of people pitted against each other, Caroline versus SBF. And we're going to learn more in the coming days. And I don't buy any of the crap he's been selling to the media. Like he knew what he was doing. He just thought he would get away with it to be able to, complete his mission and plan of whatever he wants to do with all that money. But it was wrong. He was using customer funds, and he should be in jail, I think.
Yeah, I mean, it's pretty insane how it got so big and how so many big names, whether it's Tom Brady or Sequoia, were just full-fledged behind FTX and SPF. It's pretty wild.
The same people that are trading the air tokens don't really understand. They either don't understand securities law or they don't care, right? If you understood securities law, you couldn't buy a penny, right? I mean, I would never buy a penny of a crypto token because they're unregistered securities, which means they're being manipulated in an unethical fashion by a central party. Whether or not the central party knows they're manipulating it, or they don't understand. Some people generally don't understand the ethics. It doesn't occur to them that if you change the monetary policy of the token, you have manipulated the value of the token, thereby defrauding investors in the token, right? When you turn off, yields to miners in the ETH ecosystem and you shift it to stakers, you have defrauded everyone that bought ETH based on ETH mining, and you have actually robbed the miners of their property, right? You have devalued their property. So normally when you devalue the property of your securities holders, right, there's class action lawsuit, right? They would sue you because you stole from them. Just like, in any public company, if you just got up and you said, we've just decided to unilaterally devalue your security. We've issued another class of security and given it to our friends, and we didn't tell you. You're going to get sued, right? So I think the people in the business, they didn't really understand that. Either they just don't understand, they're not sophisticated enough, or they don't care. And if you don't care, it's because you just were greedy, right? You're willing to accept the fact that someone is manipulating a central token against the interest of outsiders in an unfair fashion. You don't care. And you're willing to accept the fact that they will continue to do it because you're a mercenary. You're hoping to get in, make a quick buck, and get out. Right? There's nothing right about, you issue a token like Solana, right? And then you lock it up, and then someone manipulates the price up by a factor of 10, and then they sell it, right? And then you had a preference, and it was never taken public. There's nothing right about that, right? You can't justify it because what you did was you engaged in insider dealing, self-dealing, securities manipulation in order to take advantage of somebody, right? If you weren't taking advantage of somebody, you would have taken the company public. Right? The way that you sell securities to the general public is you go public, you file a registration statement with the SEC, you announce the governance, the risk factors, the initial distribution, all the conflicts of interest, all the related party transactions. You get a sign off from the regulators. Then after you've fully disclosed enough information, you get your books audited by a trustworthy auditor. You get a legal opinion. After you've got your books and records in place and you made all your full disclosures, then you're allowed to trade on a public exchange. That's the right way to do it. It's not just the compliant way to do it. It's just the ethical way to do it, right? I mean, the blind spot is if you hate the regulators, it doesn't occur to you that the rules are meant to encourage ethical behavior. If the regulators didn't exist, it wouldn't change the requirement. You should not lie, cheat, or steal, right? You should be honest and forthcoming with people when you induce them into a financial relationship with you.